In this video, I'll reveal a simple yet effective scalping strategy that works every single day. The strategy doesn't rely on any indicators or long preparations, it's completely rule-based, and all you need to do is follow a simple 3-step checklist before entering a trade. Now, to prove that this strategy is consistently profitable, I'll also show you some real trade examples on popular markets like crypto, Forex, and gold. What's great about this strategy is even though it's profitable on its own, you can still combine it with other systems like price action trends or even your current strategy to instantly boost its performance. That's why adding this to your toolbox could be a huge game changer for your trading. So what is the strategy? For this strategy, the only thing you need is one candle. Now you might be wondering, how is one candle enough to build a profitable system? Well, we're not just using any candle. We're using what's called the 4-hour range, which is simply the range between the high and low of the first 4-hour candle that forms during the day. So the way the system works is when we're scalping on a lower time frame like the 5-minute chart, we can actually use that 4-hour candles range to find potential entry points throughout the day. To execute this strategy, all it takes is a simple 3-step checklist, which we're going to go through all of that in this video. So step 1, the first thing you want to do is mark the high and low of the first 4-hour candle that forms during the day. Here's how to do that on TradingView. First, choose any chart depending on the asset you're trading. For this example, I'm using the Bitcoin chart. Then make sure the time frame is set to 4 hours, which means each candle represents 4 hours of price movement. Next, go to the time zone setting on the bottom right corner of the chart and select New York time. Now this step is very important because we want the first 4-hour candle to be based specifically on the New York time. Next, hover to the first 4-hour candle that formed on today's date. In this example, since it's June 23rd, the first 4-hour candle that formed today is this one. Then simply draw a line at the high and low of that candle and extend both lines to the end of the day. That's your 4-hour range on this chart. Now, an important thing to remember is make sure that the first 4-hour candle has fully closed before marking the range. If the candle is still forming, wait for it to fully close first. Once the 4-hour range is identified, we move on to step 2, which is the scalping setup. But before that, I want to quickly mention that every single day I share daily market analysis and trade setups inside my free Telegram community. For example, I once shared a setup on a coin called SUI, and just 1 week later it was up 22%. So if you want to learn how a professional trader analyzes the market daily, make sure to join my free Telegram community. The link is in the description. Now back to step 2. So after the 4-hour range is identified, we go down to the 5-minute time frame to look for scalp setups. So the setup we're looking for is when the 5-minute candle closes outside of the range, either the range high or range low, but again the key here is the candle must fully close outside, so wicks alone don't count. After the breakout, we then wait for price to re-enter and close back inside the range again. But make sure that all of this happens within the same day as the 4-hour range we marked. Once that sequence plays out, we move to step 3, which is our entry. In this example, since price broke the range high, that's a signal to go short. For the stop loss, we place it at the exact high of the breakout move, and for the take profit, aim for at least 2 times the stop loss size. And here, price came down and hits the profit target. Now let's look at another example. Here we're on the Bitcoin chart on the 5-minute time frame, and right here we've already got the 4-hour range marked out. So that's step 1 done. We can now move to step 2. Look for the trade setup. In this example, we can see that price came down and broke below the range low. However, the candle didn't actually close below it, only the wick. That means the setup still isn't valid, but shortly after we see another breakout, but this time the candle does close below the range low. So that's the confirmation we needed. Now we wait for price to re-enter and close back inside the range again, and right here the candle closes back inside. So that completes step 2. Now we move to step 3, which is our entry. Since price broke the range low and then re-entered, this is a signal to go long. For the stop loss, we place it at the exact low of the breakout move, and for the take profit, we set it at 2 times the size of our stop loss. As you can see here, price moves up and hits the take profit target. Now keep in mind, as long as we're still within the same trading day as the 4-hour range we marked, we can still take more trades if another valid setup shows up. So as we let the chart play out, we can see that price is trading well outside of our 4-hour range. However, it didn't manage to re-enter again until the end of the day. That means for this trading day, there were no more valid entries to take. But even with getting just 1 trade today, it was a high-quality setup and we walked away with solid profits. Now that you understand how the overall strategy works, let's take a look at some real trade examples across different markets so you can see just how well this strategy performs. So let's start with crypto. Here I'm on the Bitcoin 5-minute chart and I already have the 4-hour range marked. Right here we can see price broke out and closed below the range low, then it quickly closed back above. That gave us a long entry. Stop loss goes at the low of the breakout and take profit set at 2 times risk. And as you can see, price hits the profit target giving us a 2R profit. After that, price went out of the range again, but didn't close back inside, which means there were no more setups for today. Now for the next day, I marked the high and low of the 4-hour range. Here the 5-minute candle broke above the range high, then closed back inside, so this will be a short signal. Stop loss goes at the range high and take profit at 2 times risk. And here, price hits the take profit target, giving us a 2R gain. Next, price dropped and broke below the range low. After that, it re-entered inside the range, so this will be a long setup. Stop loss goes at the range low, take profit at 2 times risk, and once again price hits the target, giving us another 2R profit. On the same day, price gave us another setup. It closed above the range high, but then closed back inside. That signaled a valid short entry. Stop loss goes at the range high, take profit at 2 times risk, and here price also hits the profit target, giving us another 2R profit. Later in the same day, price made a huge dip, but then re-entered inside the range, so this actually gives us a long entry setup. But here's the thing with this setup. The breakout was quite huge, which means if we were to place a stop loss at the low, it would be a very large stop loss. So for these types of scenarios, instead of using the exact low of the range, I looked for the nearest key level to place the stop loss. In this case, there was a small resistance level, so we set the stop loss there instead. For the take profit, set it at 2 times risk. Here price hits the target perfectly, another 2R profit secured, so that concludes the setups for today. Now moving on to the next day, again we have the 4-hour range marked. Price broke below and closed under the range low, but then came back inside. That gave us a long entry. Stop loss goes at the lows, take profit at 2 times risk, and here the trade actually ended up being a loss. So this will be a 1R loss. Now the reason I'm showing you this is because I want to be fully transparent about the results of this strategy. I'm not only going to show you the wins, but also the losses. On the same day, price actually gave another long setup. We can place a stop loss at the range low and take profit at 2 times risk. And here price moved up a little, but then dropped back down and hits our stop loss once again. So that's another 1R loss for the day. After that, price didn't re-enter the range until the end of the day, so that wraps up today's session. Now let's see the final results. Here you can see all the trades we backtested. Out of 7 trades we took, the strategy gave us 5 wins and 2 losses with a total gain of 8R. That's about a 72% win rate on the crypto market, which is extremely impressive considering we only used the very basic version of the strategy.